Hello everyone, welcome to the technical analysis webinar. My name is Troy. I'll be presenting for AvaTrade this evening. Real quick, we'll go over a couple things. Keep in mind that all trades have risk. No one trade is guaranteed to profit. I think we all understand that. So in some way, you should be managing your risk in a way that makes sense for you, whether you're using stop loss marks, hedge positions may be set up in the opposite direction to cover risk. Maybe you're using AvaProtect, which is an exclusive feature found only on our AvaTrade Go mobile app, which is an award-winning app, by the way. And it's also, that feature is also found on our home-built web trader platform as well, which has the same sort of features you see on the AvaTrade Go app that makes risk management easy. We'll look at a couple features before we get going on the live charts with how it assists, not just with the extra AvaProtect coverage that's available to protect against losses, but also the risk management features in terms of calculating exposure, potential profit, margin requirements. All that's done for you in the order window with our web trader and our AvaTrade Go app. So if we're talking about managing risk, those are all tools that can help you in that regard. Now, the other side of the coin is while every trade has risk, every trade also has a good potential for profit. And so obviously that's why we're all here, is for that potential profit that each and every trade brings. So the idea is we're going to go over some concepts, some information that hopefully will assist you in improving upon your P&L, or if you're brand new to trading, which I know a number of you are beginners, what we cover should go along with helping to assist building a foundation in terms of how to start building strategies rather than just improving existing strategies. So I think we'll cover enough that it'll be good for beginners and also experienced traders as we go along, that everyone can pick up some things from the session. Now, real quick, what is technical analysis? Just the basics of it. It's looking at the historical movements on the charts. Usually candlestick charts are the type of chart we're talking about, and looking for repetitive patterns, price levels, predictable movements that hopefully lend to them the ability to better predict the movements in the future based on those past movements. Obviously, what happened in the past is no guarantee to be reflective of what will happen in the future, but it certainly can be helpful to look at those patterns and those price levels to get an idea of where movements might break through or reverse, find pressure to change direction one way or another, etc. And we'll go through some of those concepts today on the live charts and look for potential trade opportunities that you could be interested in. Manual methods of technical analysis. Basically, we're talking about drawing our own support and resistance levels, drawing our own trend lines, etc. Another way to do technical analysis is to use indicators, which give you an idea from the indicator of when maybe the market is overbought or oversold, when it might reverse or continue moving, etc. As we go along, if you have any questions, please ask. You're free to type in the chat box questions at any time, or if you want to give some input, I'm happy to share ideas as well. And so let's quickly take a look at some of the main headlines for the fundamental news, which is not the focus of this webinar, but it's helpful to have an idea of what's happening in the markets fundamentally with the headlines before we start doing technical analysis, because sometimes there's a definite direction that the wind is blowing, and you might prefer to find entry points in one way or another based on some major headline or something that occurred during the day. Today doesn't seem to be one of those days. It's pretty flat in terms of the news. I found a couple headlines you might be interested in. S&P 500 flat as telecom weakness offsets strong retail earnings. So the US had strong retail earnings. There was some weakness out of telecom, it's telecommunications companies. So it's kind of one good thing, one kind of bad thing, not huge news. If we look, if anything, everything's slightly red today. We see that on the snapshot here of the markets that we see. And the Nasdaq's up, S&P 500 and Dow Jones are down slightly. So the tech stocks maybe are doing better than the other stocks, which helps the Nasdaq maybe be in green right now while the others are slightly red. Volatility index is pretty flat, not up or down much in terms of what we call the fear index, the volatility index. We're at about 1% down in terms of volatility. Usually if volatility is way down, like 5%, 10%, even larger sometimes, then you'd say, okay, I think that I would prefer to buy on the markets. I would prefer to buy on oil. I would prefer to sell on different assets that tend to drop when there's low volatility, etc. But today's not one of those days. We don't have volatility up 10% or down 10%. It's pretty flat. Right now, it's less than 1% change in volatility. The dollar, US dollar, is weakening a bit, which makes sense when we look at the next headline. US Senate Republicans readying new infrastructure proposal. So the Republicans, the Democrats in the US are trying to come to a deal on more stimulus, which has been a popular thing of late ever since COVID and economies trying to stay afloat and reopen. There's been a lot of money handed out, not just in the US, but in other countries as well around the world that sure, it helps the markets rise and the stock market has done great. It's helped oil prices go up, etc. All this free money being handed out or cheap loans, zero interest rate loans, etc. It really helps the market in general, but it doesn't help the strength of certain currencies like the US dollar in particular, with the trillions, literally trillions and trillions of stimulus already handed out in the US and now planning another huge multi-trillion-dollar stimulus deal for infrastructure and probably for other things eventually. So what we're looking at here is good reason why the US dollar continues to be somewhat weak. And so we see the dollar index here down 0.37%. Now, that's not a huge drop in the strength of the US dollar, but overall, paired as a basket against other currencies, the US dollar certainly isn't roaring up. It isn't strengthening. It's actually weakening a bit more. So that's what we see in general on the headlines today. Maybe the markets could be a little happy about an infrastructure deal that could eventually pass, but also the markets are fearful of hyperinflation. Inflation's been starting to rise a bit in the US because of all of this stimulus. So I have to keep an eye on that. And so that, and let me do a quick quiz. What instrument tends to be bullish when there's fears of inflation? And certainly it's been bullish these past couple of weeks. We'll take a look at it. What's the number one safe haven that people rush to when there's a fear of inflation, especially on the US dollar? Yeah, gold, exactly. And so gold has been very strong, very bullish. It dropped into the 1700s a while back, but boom, up it came rushing near 1900 an ounce again, right? Trying to push 1900. We'll take a look at where gold is and what the bigger picture might be. So that's the quick fundamentals. I know we're in a technical analysis webinar, but I just can't separate the two completely from each other. So we've got an idea that the markets are kind of flat today, not huge news one way or another. But if you're leaning one way on gold, you know there's stimulus coming. We saw that headline, which could weaken the USD further. We know there's some fears of maybe inflation creeping in. Retail sales were higher than expected. So that can be inflationary in terms of driving prices up. And so we'll keep an eye on that. Now, when we take a look at AvaTrade's main website here, some things to keep in mind. We talked about AvaProtect that's available on AvaTrade Go. Again, that's our award-winning mobile app that was built by AvaTrade. It allows you, AvaTrade Go, to trade from your mobile devices on your MT4 and MT5 accounts. So you don't need a separate account for AvaTrade Go. It's a mobile app that allows you to have a user-friendly interface compared to the MT4 mobile app or MT5 mobile app, a more user-friendly interface to trade on your MT4 and MT5 accounts. And the same is true for our web trader platform, which you get to by logging in here. Okay, so a PC-based platform, log in here and you're on our web trader, and it has AvaProtect and all these special features. And for mobile, you can either log in here. The web trader works fine on your mobile as well. Or you can download our mobile app, which is AvaTrade Go. You just point at trading platforms and AvaTrade Go. So you can get it from either of the main app stores, and it has all of the features that I'm about to show you that's in our web trader as well. So if you log in from here, you're in this platform, our web trader. Now, those of you who've been with AvaTrade maybe for a number of years, you might not see the web trader when you log in from our main website. You might be directly in the client area, which those of you that have the web trader, you get to the client area here, my accounts, etc. If you don't have the web trader active on your account because you're an older client with AvaTrade, the reason older clients wouldn't have it active is we just launched the web trader a year ago or so. So just ask your account manager, ask support, online chat to add the web trader feature functionality to your website login, and then you'll see this when you log in from our main website. And so real quick, I mentioned some of the risk management stuff that I think is important that AvaTrade Go and this web trader platform both provide. So, I mean, some of the tools you're seeing already, the search feature, you don't have that on MT4. Very easy to find what you're looking for. And whether you're buying or selling on gold, it doesn't matter. Click buy or sell. You can switch, you can change your mind once you're in the order window, whichever you want to do, buy, sell. But what I want to show you is some simple things that really help even experienced traders. And it's not available on the MetaTrader platforms or apps. So if I pick a trade size, it tells me the lot size and the number of ounces in this case. It tells me how much margin impact it'll have, how much is required to go to margin to open this trade. That changes as I change the trade size. It adjusts. It tells me the nominal value as well, the dollar value of the position. I can add other options. If you click more options, it shows these down here. We'll look at AvaProtect in a moment. If I put, let's say, a stop loss, and I want to know, well, how much am I risking if I buy on gold now and I put my stop loss below, I don't know, 1800 or 1850 or wherever you choose to put your stop loss. So I might decide, okay, let me put my stop loss at 1825. Maybe that's the number you think. If it drops below that, you don't want to lose any more than that. So you put 1825 as your stop loss, and you see this is the possible loss. So based on the trade size and your stop loss, it calculates your loss, and this will be listed in your account currency. Okay, so very important that you understand your risk to the prices that you're looking at before you even open the trade. It's calculating it for you. So, and if I change my trade size, maybe I look and I say, well, yeah, I only have less than a couple thousand in the account. Maybe I don't want to risk that much. It's like 40%, 20%, 10%. How much do I want to risk? So, if I wanted to risk 10%, it would be 180 or so would be how much I would want as my possible loss. So, if I've changed my trade size, I say, okay, what if I want my stop loss that far away? I better only take a trade size of 4 ounces. Now I'm risking less than 10% if that's what my goal was in terms of my risk management. Maybe I want to risk 5% or 2%. Then I adjust the trade size until I see the number here that I want in terms of my risk. Okay. And maybe I say, you know what? No, because my potential profit's going to shrink as well, right? If I'm looking to take profit at, 1900 or 1950, wherever I think gold might go to. So if I'm going to put, let's say, 1950 here, then it's going to show me my potential profit, $82. And I might say, well, I want to make more than that. So I go back to my 10-ounce position, right? I say, okay, I think it could go to 1950. Why not? If that's what I believed. And now I see, oh, wow, potential profit over $800. That's a large percent gain on my account. And maybe I'm happy with that, but I'm not happy with the risk, right? That I see here, 427. So instead of putting a stop loss, you have the option with gold, silver, and FX pairings to use AvaProtect. I could say, maybe I think there's big news in the next day or two. Maybe I think something will happen with infrastructure in the US and stimulus, and that could drive gold up. So maybe I put protection for a couple days here. And I say, wow, I only have to pay $89 or so to protect this trade against any losses that could come if this goes the wrong way. And if I close the trade anytime during this covered time period, or when the covered period ends, if it's in the negative, whatever the negative floating is, I get added to my account from the protection. So I can get kind of a pause on my risk for 2 full days and only pay this small fee up front. And my potential profit, you see, is way bigger than what my risk is, my potential profit to the price maybe I think it could go to. So just an extra way to manage risk with AvaProtect. Very unique feature I don't think you'll find with any other brokers. And very nice tools here for understanding your risk as you go along. Any questions on any of this before we move on to some technical analysis on the charts? Okay, if I see any questions pop up, I'll address them as I see them. And real quick, the Web Trader platform has a nice feature for technical analysis, since that's our topic for this webinar. If we click on Trading Central, all live accounts, and if you're working on only a demo right now, if you're new to things, at least fund a minimum amount to a live account so you can have all the features and really evaluate all the tools that are available with AvaTrade. And you'll see, if I look at, say, analyst tools or analyst views, I'm sorry, you see I have live signals. They're time stamped coming in. I have signals on Ripple, Litecoin, all the different cryptos popping up. I can switch to Forex if I want signals on Forex, etc. And it breaks down the technical analysis. It gives you the direction of the expected move, all the price levels, the indicators that went into the thinking, etc. So very nice technical analysis done for you. Signals coming in for free. Most times a signal service like this is going to cost money, but on all our live accounts, it's a free premium service with AvaTrade. So that's something that's really cool to check out, and you could compare it to your own technical analysis and see if you agree with it, or maybe try some of the signals, put AvaProtect on the trades if you want, if it's FX, gold or silver, and have a managed risk along with that signal that you might use. So let's take a look then at the MT4 platform. I know a lot of you are comfortable with the MT4 and MT5 platforms, maybe more familiar with it. So let's take a look at that as well. We'll do a bit of technical analysis now and see how things are moving on the charts. Keeping in mind that it's kind of probably a ranging day today, we might say. By ranging, I mean kind of up and down between a certain high and low point without a huge move one way or another, because the news has been kind of flat. So that makes for nice ranging type trading with strategies where you expect reversals to come down off of major resistance levels or to bounce up off the support levels for a lot of the movements without barring any big breaking headlines coming at the last second, which then is why you're risk managing with stop loss and AvaProtect, etc., just in case something unexpected happens. Type OK if you're with me so far, and then we'll move on. All right, great, thank you. I've got enough responses. I was just double checking also that the audio and everything was good, so I see a lot of OKs coming in. All right, so what do I have here? I have a gold chart up. So we're looking at 1 hour candles. It's not surprising that gold has been, up more than down in the past week or so. These are 1 hour candles, so we're looking at a week or so of movement that I'm outlining just in this large rush up, okay? Went flying up. This is a response to monetary policy around the world and largely also in the US. Easy money, low interest rates, lots of free money being handed out, stimulus packages, up goes gold as a safe haven from inflation fears. And so The more money is printed and handed out, the weaker the currency can become. And so then gold looks all the more enticing maybe to buy, and up goes the price. Now, if we look at 1-day candles instead of 1 hour, you see, here's that large uptrend just right here where I'm pointing. That's what was that 1 hour candle time frame that I said was about a week's worth of movement. 1, 2, 3, 4, 5 green candles, right? That's just 1 week on those 1 hour candles. If we look back here, look how many 1-day candles this has been going up. Okay, this has been rising since back here on 1-day candles. So that's quite a bull run on gold. We're talking from 1685 or so to 1870 almost. 1877 actually, it got near before pulling back a bit. So we're talking almost $200 an ounce bull run in the last, from March 28th to today. Okay, so in less than a couple months, couple $100 an ounce rise in gold, and that's directly related to inflation fears. You might say, well, why are the markets reaching new highs? And at the same time, there's so much fear that gold is also flying up $200 an ounce, and it's because they don't move based on the same things. Meaning, the markets rise when there's optimism about businesses being able to do well, and since there's low interest rates and free money being handed out, the markets go up. So that's economic optimism. And you might think traditionally that shouldn't gold drop if there's happiness on the market, if there's not fear on the market? And the answer is no, not necessarily. There can be fear of inflation. At the same time, Wall Street might like the free money that's coming out, and stocks go flying up. So sometimes there's fear that can cause the markets to go down and gold actually to drop during fear, if it's fear of something different other than inflation. Okay, if it's fear of bad jobs, fear of a unemployment rate rising and things like that, you actually can see gold drop and the US dollar strengthen with that kind of fear. If it's fear of inflation, then that's when we tend to see gold go up, and a lot of times inflationary policies are good for Wall Street. We actually saw gold hitting all-time highs while the stock market was at the same time this last year. So it's interesting to see that occur, but that's the reason behind it. Let me get rid of some of these lines. So we've kind of junked things up on the charts. Okay, so what we're looking at then on the 1-day candles, a huge run up from this support level way down here in the upper 1600s. And then on the 1-day candles, you realize, why did gold stop running right where it did today? See it hit this high and pulled back? Look at that textbook reversal off of the resistance level for gold. So if we look at the bigger picture, a lot of times you can predict the smaller picture better. So I'm looking at 1-day candles, and now I'm smarter. I see resistance on the 1-day candles drop. I see resistance again on the 1-day candles, and it dropped from this exact spot here, and then months later, the price finally returns there, and look, it reverses exactly from the same spot. So if you were buying on gold these past weeks, when it got near this 1875 price, that was a spot where you might have said, okay, I could take some profit because there could be a pullback. And right on cue, right at this 1875-ish price, you see resistance, and it hits that price and down it came. Okay, and you'd say, well, that's not much of a drop. That's a drop from 75 to 67 we're looking at right now, and it actually dropped to the bottom of this wick down to about 62. So we're talking $10, $15 per ounce pullback. It's a nice little profit if you sell from that resistance, or if you took profit and then re-entered after it dropped that $15, whatever the case may be. But we can see the technical analysis on it. It's not just by chance that that's where it stopped rising today. Even the inflationary pressure causing gold to go up respected the technical analysis of that resistance level on the 1-day candles. Okay, now we can zoom in and say, okay, what about 1 hour candles? Okay, here's that red line I drew on the 1-day candle resistance. So looking at the one hour candles, you see this big uptrend and you say, well, why did it stop? Why would I expect this to slow down here? When we look at the 1-day candles, we see it. Amen. You're asking what is the minimum amount that you can start with? I'm assuming you mean with a live account for us. I believe it's 100 of the currency you choose, 100 USD, 100 euros, 100 pounds, depending on your choice of currency, is the minimum amount to get a live account going. So you could go ahead and do that, check out all the features. You don't have to trade on the live account. You could add a demo account if you don't have one from your client area. And by having the live account, then you have all of the other features available to check out and see if you are confident enough to trade on the live account. Okay, so let's take a look then. What might you want to do with gold, right? Well, there are a couple things. A pure technical analysis move, I can tell you right now, is okay, let me take a trade size that makes sense for my balance, for my risk management. And remember, if you use AvaTrade Go or the web trader, it'll calculate how much you're risking, what your potential profit is, etc. You also could put AvaProtect on the position. If I'm opening my trade from the MT4, I don't have that done for me. You'd have to manually calculate your exposures and those things. But let's say I want to take a trade size of, I don't know, 15 ounces of gold. So I have 0.15, which means I'd make $15 for every dollar it goes the right direction, or I'd be risking $15 for every dollar it goes the wrong direction. And let's say I think from a purely technical standpoint, the news is kind of flat today. I don't think major 1-day candle resistance levels should be broken when the news is flat. And so maybe I say I'm going to sell from this 1-day candle resistance. So, okay, I take my sell position, market move. And then I say, where should I put my stop loss? Well, a logical spot would be, if I'm selling, to put my stop loss right above the 1-day candle resistance, right there. If it breaks through the 1-day candle resistance, well, then it could be up and running further towards 1900 or higher, right? It would take pretty big news to break the 1-day candle resistance. If it breaks it, then maybe that's smart to give up on my sell position at that point. That's the idea of the technical analysis, technical trading. Trading, selling off of the 1-day candle resistance. Again, if we go to 1-day candles instead of 1 hour, you see this red line that we drew is a resistance level on the 1-day candles back here. Resistance, resistance, and you see the amount of momentum it took to get below that price level. Look at this huge candle. That's called a breakthrough candle. It took a lot of momentum to get below this price level. And since then, it hasn't had enough momentum to get above it. Resistance, resistance, and again today, resistance. Okay, so maybe I sell in the short term on gold, thinking I don't expect necessarily a stimulus package to pass tonight. So maybe that resistance holds in the short term. Okay, so I go back to my 1 hour candles and I put my stop loss above that resistance, maybe a little further above the resistance, depending how much I want to risk, just so that if it tests the resistance, I don't hit my stop loss on a false breakthrough and then it drops, and then I'm mad because I got out early. By the way, AvaProtect helps prevent that. You don't have to put the stop loss during the protected time period. So no matter how far it goes the wrong way, if it comes back the right way during the protected time period, you're still in on the trade. But traditional way of trading without AvaProtect, I put my stop loss above the resistance, a decent distance, so I don't get a false test hitting my stop loss too early. And then my take profit, maybe I go, since I'm scalping here, to the first support level. There. Okay. This was resistance here, resistance, resistance, resistance. That was just this week. And then we see resistance and breakthrough candle. Remember, we talked about the size of a breakthrough candle being bigger than all of the other candles around it. So look at the momentum these two candles had. That's what it took. A large momentum to break this resistance. And up it went. And now it's consolidated. And it reached a larger resistance up here, the 1-day candle resistance. And so if it's going to pull back, perhaps it finds support right here where it had broken through this resistance and may find support then above that old resistance. That's usually the way broken resistance acts, it starts to act as support once it's broken. So in this setup, I'm risking a little bit less than my potential profit. And this is more of a scalp move, meaning maybe I understand the bigger picture is inflationary right now, and that gold probably could go up further in the bigger picture. But I also feel that in the short term, I could scalp a profit in the opposite direction, maybe, because it's kind of a flat news day. And there's nothing new that's hitting the news cycle, at least not the last we looked, that would cause huge alarm about new inflationary fears. And so after that huge $200 an ounce bull run the past month or two that gold has been on, it reaches a major one-day candle resistance. And so our technical analysis says it makes sense gold could pull back right now a little bit. Michael is asking, wouldn't it be better to put a pending order closer to the resistance? And my answer would be yes, about 1, 2, 3, 4, 5 hours ago. Yes, that would have been awesome. If we had a resistance, I mean, a pending order, which would be a sell limit pending order, if we had programmed it to sell when the price was down here, if we programmed it to sell from the one-day candle resistance, you'd already be in a nice profit. And yes, of course, that would have been more ideal. But however, you'd have been doing that before it confirmed that it was respecting the resistance. So sometimes that's more of a risk because you haven't seen it respect the resistance yet. And sometimes it hits resistance and blows right through it. Right now, we see that it's respecting the resistance. Once, hit it and dropped. Twice, hit it and dropped. It's pulled back up some to a somewhat opportunistic spot. So now if you're looking at it in hindsight saying, should I now put a sell limit rather than doing a market sell? And my answer is each trader has his own preference. Now, the person who says, no, I sell now, it's because, not because they wouldn't like to sell from a higher price, but it's because they're thinking it might not go back up to that higher price. It already tested the resistance. If I put a pending order now up here as a sell limit and hope to catch a higher price to sell from, what if it just keeps dropping? Then you sit there and you say, oh boy, I had a feeling it was going to pull back, and I was trying to be too perfect with my entry point by putting a sell limit at a higher price, and it just kept dropping, and now I missed the move. So you have to weigh the potential consequence of trying to get a better entry point. And certainly I wouldn't say you shouldn't put a pending order and try and get a better entry point. You certainly can do that. You also can do both, right? You can split, you can diversify. So I could sell like I did, and then I also could say, and if it comes to a better price, I'm going to sell again. So I could switch to pending order. I can go to a sell limit, which sells from a higher price than the price is now. And I can put my sell limit to sell from 1874, let's say. And I can put my stop loss at the same spot this one is, 1877 or so. And I can put my take profit at the same spot if I want, 1856 or so. And there we go. So now I have a pending order. If the movement comes up and hits this line, I sell again. And if it breaks the resistance and comes up here, then you see my stop losses. And I'll just slide this so they're both in the same spot. Okay, so if it gets to a better price, I sell, right, from the resistance. Now, because we feel like we're working against the bigger fundamental news, and that is that there are inflationary fears growing, and that tends to cause gold to go up and break resistance levels. Personally, I don't like trading against the fundamental news. So from a technical standpoint, this is a nice sell from a nice resistance level. Would I load up with multiple trades from multiple price levels in a sell position right now? Based on the bigger fundamental news, probably not. I'm looking, if I'm trading against the fundamental news, I'm looking to get in and out pretty quick, trying to take advantage of a nice resistance level. And yes, it would have been great if 5 hours ago, 8 hours ago, you took the time to look at gold rising and took the time to look at the one-day candles and say, okay, where might gold start to drop, where might it have trouble rising past? And you clearly would have saw in the one-day candles, let me put a pending sell limit at 1874. You easily could have saw that and already be in a nice profit on a short pullback and have already gotten out. Would have been an easy sell. Very little risk to put your stop loss at 1876 if you're getting in at 1874, and you could have already profited $10, $15 per ounce drop on the little pullback that it already did. I think there could be more pullback. We'll let this little setup here with the pending order and the market move run and see if either or both of them are able to pull profit for us or not. Okay. And obviously you can make some moves on your live account if you wish. I'm working on a demo here. If you understand the setup, the technicals behind it, the fundamentals behind it, it looks like a move that can make good sense. All right, let's take a look at maybe crude oil. This is a sign that maybe there's some fear in the market because you also see crude oil pulling down. Okay, we saw crude oil have a pullback, and you might say, well, did crude oil also hit a resistance level on the one-day candles? And if we go to one-day candles, the answer is, well, kind of yes. There's resistance up here. It's kind of a cloudy resistance level because you've got the high point here, and then you've got another resistance level here that it already broke. Okay, so you see one-day candles on crude oil, resistance here, resistance, and then today it broke that resistance slightly and right back down. Okay, that tells me oil has the potential to climb to this higher resistance level up here around 68. Okay, why do we think that? Fundamentally, oil loves stimulus, right? If we're talking about infrastructure spending in the U.S., any type of low interest rates, any policies around the world, in the European Union, the UK, China, etc., to help spur the economy with low interest rates and stimulus, oil tends to go up with that kind of news. Okay, easy money for the economy tends to increase demand for oil, and that's why as gold has gone rising up over the past couple months, so has oil. Okay, it makes sense fundamentally. So the fundamentals are oil could keep rising. Now we see the technicals saying we're getting close to major resistance levels. 68. What kind of pending order? Just like you suggested for gold, what kind of pending order could you put on oil to sell from 67.9 from this upper resistance? What kind of pending order would sell if oil gets near this high point here? We could program crude oil to sell from what price with what kind of pending order? We'll set it up here. Michael, that's what we're talking about here with oil, if that's what you're asking. Pending order from the resistance. So we're looking at sell limit, would sell from a higher price. And if the movement gets near this resistance here, likely there'll be at least a temporary pullback as the price gets near this high point. Okay, no guarantee, but we saw it with gold on the one-day candles. It pulled back 15 an ounce as soon as it hit exactly almost the spot that we saw on the one-day candle resistance. And so oil, if it gets to that one-day candle resistance right here, which is a high for the year up there around 68, you could see a sell, a pullback on it. Good question, Jose. What's the difference between a buy stop and a buy limit? Buy stop buys from a higher price than the current price, and buy limit buys from a lower price than the current price. And you might say, well, why would I want to buy from a higher price? What kind of sense does that make? It would be because maybe you're waiting for a resistance level to break through to confirm an uptrend. Okay, so if a resistance level breaks, like on gold at 1875, if it breaks that resistance, it goes up to 1880, maybe now you buy thinking, okay, it's on its way to 1900 now. Okay, because it takes a lot of momentum to break that resistance. So sometimes buying from a higher price can make sense as much as you might think buying from a lower price makes sense. Okay, confirming an uptrend. Sometimes when you're buying from a lower price, you're buying in a downtrend. And so maybe it's not the best idea always to buy limit pending orders where you're you're watching the market drop on something and automatically think it has to bounce back up when you buy low. So buy limits are when you think it'll bounce back up. Buy stops are when you think it'll just keep going once it breaks through on its way up. Very good question. So right now, if we're planning to sell from the resistance level up here on oil, so then that's a sell limit, selling from a higher price. Okay, so that price then is 67.9 or so. If the price of oil hits 67.9, okay, then maybe you decide you want to sell. And your stop loss could just be up at 68.9, maybe $1 up in the price of oil, or even 50 cents up, which is pretty significant actually with oil price. So it could be 68.4. You could say I'm only going to risk 50 cents per barrel because you're getting in at such a nice price point in terms of the resistance level. You don't have to risk as much to get your stop loss to the other side of the resistance. And your take profit could be, just a set number, $1 or something down, if you think it could just be a temporary pullback. So if you're getting in at 67.9, maybe 66.9, $1 down, which is more than 200% potential profit compared to what you're risking with 50 cents risk, or exactly 200%, I should say, potential profit compared to risk. Okay, risking 50 cents per barrel, going after $1 profit per barrel. So if the price hits the green dotted line right here, it sells. If it drops $1, which it easily could do once it gets to a resistance level like this, like gold pulled back $15 an ounce, right on cue. If this one does that with oil, boom, you could make a quick $1 per barrel profit. And you say, well, what's $1 per barrel? It's not much profit. It is if you have 1,000 barrels, right? A one lot position. You just have to have the right balance in your account, risk manage things properly, etc. And you can make significant profits on these little movements. Okay, even if you only have 3 or 4 that trigger each week, if you're making significant profit on them, it really can add up by the end of the month. Now, let's do an example of, well, what if it breaks the resistance and confirms an uptrend? What if it breaks through, hits my stop loss, and breaks that resistance? Shouldn't I buy because it broke the resistance? Doesn't that mean there could be a breakthrough candle where it keeps rising really strong? And the answer is yes, that certainly could happen. So the same reason you'd get out of your sell if it breaks the resistance and hits your stop loss, that's the same reason you could put a buy stop pending order up there. So the question was posed just a moment ago, what's a buy stop pending order? It's buying from a higher point instead of buying from a lower point, which is a buy limit. So buy stop pending order, we could program it to buy from, say 69 if it hits 69, meaning I'm going a little higher because if it clearly breaks the resistance by enough, then something significant must have happened. It's not a false breakthrough maybe. So maybe I say if it hits 69, I'm in on a buy position. I put my stop loss then back below the resistance at, I don't know, 67. And maybe my take profit is up at 75 per barrel, something like that. Okay, so now I've got a pending buy stop that if it breaks the resistance by enough, I'm in on a buy position. And where would I put my take profit? Maybe I need to look at the 1 week candles. And that's what we're seeing here. When I said around 75, look, that's the next resistance level. Beyond the 1 day candles are the 1 week candles. And look, here's the resistance on the 1 week. Resistance, resistance. So we put our take profit just before that resistance, right? Just before 75. And if it breaks the 1 day candles, it could be up and running towards the next resistance level. So at the same time you're preparing to sell on oil, you easily can have a backup trade with a pending buy stop. If it breaks and hits your stop loss on the sell, hey, I'm not emotionally tied to selling. I'll make money on a buy as happily as I would on a sell. So I'll take a shot on a buy, and that's a technical analysis strategy. I have no idea what fundamental news might cause that to happen, to break the resistance at that price level at 68 and hit 69 and maybe keep climbing. But whatever it is, I've got a pending order waiting for it to happen if it happens. And maybe exactly what we already talked about is what might cause that to happen, being an infrastructure stimulus deal in the US. $1 trillion, $2 trillion, $3 trillion of stimulus, whatever they might pass, boy, that could drive oil prices up. Absolutely could. And so if there's enough momentum to break this resistance and trigger our buy stop, the idea of the buy stop pending order is exactly that. That if there's enough momentum to trigger it, meaning it broke the resistance, then why couldn't it go up to the next resistance level? That's the idea of the buy stop. Okay. And sell stop's the same idea, but in a downward position, selling from a lower point, same concept of buying from a higher point. So a sell stop would be if it breaks the support level and breaks through, then maybe you sell, because breaking the support would confirm a downtrend. Type OK if you're with me on this strategy, kind of a twofold strategy here. Selling if it gets near the resistance, and buying if it breaks through the resistance, and giving up on the sell then with a small loss. Now the question is, well, what if I want to trade on oil now? It's not at the resistance, it's somewhere in between. And the answer would be, from a technical analysis perspective, it looks a little sloppy to trade right now. Meaning it broke this little support here. You see this? This should have been resistance, which should have been support coming across. It broke right below that. Now it's bounced straight back up. It's between the support level down here and the resistance level up here. So I would be looking to buy from this support down here around 63. Okay, there's a support level down around 63, support. There's a resistance level up here around 67, resistance, which we have a pending order simulated, ready to go. Thank you, Shepard. I'm glad you're taking in some information from this. I'm glad it's helpful. Okay, so for the same reason you might have a sell limit on oil up here, you could easily put a buy limit down here, just above this support level, so that if oil hits this support level, you buy. If it hits the resistance level up here, you sell. And that strategy makes sense on a day like today where there's not really big news. Ranging, we call it. The market is ranging. Hits resistance, drops. Hits the support, up. Hits the resistance, drops. Hits the support, up. Hit the resistance, dropped. It got near the support down here and bounced back up. So until something changes in the news, you can trade off of this kind of pattern, and it has good potential to bring you profits. So we only simulated a sell limit from up here. You could put a buy limit pending order to buy from this support level down here. Same idea, okay? And you could walk through any instrument today and do that, including cryptocurrencies. Here's Bitcoin. Bitcoin's selling off a bit. So you'd say, okay, where's the support level? Let's go to one-day candles. Wow, it's on a support level. Look at that potential opportunity. If we look at Bitcoin, look at that support level. And you know, cryptocurrencies trade a lot. They respond very well to technical price levels, cryptocurrencies. And one reason that cryptocurrencies respond to technical strategies so well is because they're not tied to any one local economy. So cryptocurrency isn't going to go up or down because, you know, the European Union had bad unemployment rate number. You know, the euro will strengthen and weaken based on European data, and the US dollar will strengthen and weaken based on US data, but Bitcoin is not tied to any one economy. So it doesn't respond so quickly to individual countries having different types of jobs and earnings numbers, etc. So cryptocurrencies tend to respond nicely to technical price levels and be more independent of the fundamental news, unless the fundamental news is directly about the cryptocurrency industry, which also happens on occasion. So looking at the technicals here, I see the one-day candles. Again, the one-day candles today have been magic. If you wanted to predict where would Bitcoin bounce today, look at the drop on the one-day candles. Down, 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 down. Look where it bounced from. It hit 42,175. It's at 42,450 now. And it bounced higher than that. You can see the top of this wick. It got up to 45,000 something, right? So it bounced over $1,000. So you think this bounce looks small? That's $1,000 per coin bounce, right? And you look and you see, well, why did it bounce from that spot? Look over here where we drew the price level. This was the old resistance. Look at this. Resistance down. Exact price level where it bounced from today. Old resistance becomes support. It happens not every time, but many times. And so we see resistance. We see the classic breakthrough candle. Remember, we saw the breakthrough candle on oil. We saw it on gold, etc. When a resistance level forms, it takes momentum to break it. Therefore, you see a larger candle was required, meaning there was a lot of momentum for a price change in that time period, a lot of price change in one candle. It's a breakthrough candle. That's a sign that that price level now will become support because some kind of news caused it to go above that price level, some kind of big news. So now we see when it tested that level, here was the spot to buy. That was the breakthrough price level. The old resistance level becomes support. It got down near here and up it went. Now today was your next chance. It hit that price level and up it went 1,000 per coin. Now it looks like it might test that price level again. And yes, you could try to buy from that price level again. It might not bounce this time, it might break it. But trading isn't about being right every time. It's about if you follow a certain pattern or strategy, can you win more often than you lose? And so so far today, you would have using one-day candles to find support and resistance levels and selling from the resistance levels on gold, on oil, buying from the support levels on cryptocurrency like Bitcoin today on the one-day candles. You'd be 3 out of 3, right? Or at least 2 out of 3. Maybe oil broke through before it dropped. So you might have got nicked out on a stop loss on oil before it went the right way. So let's say fairly 2 out of 3. You'd have won on Bitcoin, you'd have won on gold, you maybe would have lost on oil. You could have re-entered and won on oil as well. Just using one-day candle support and resistance levels to determine where to buy and sell from. Banking that there at least be a temporary reversal when it reached that price level. And now we have a pending order on oil. Hopefully it goes up to that resistance around 68 or whatever it was that we drew the one-day candle resistance, hits the pending order, has that temporary drop of maybe $1 per barrel before maybe continuing up further. But those resistance levels, usually, many times anyways, even if the movement is going to continue through them and to go further, before it goes through them, usually there's some kind of response to that price level where there's a profit potential before it then could continue and break through it. Okay, it's less often that those price levels just get blown through without any type of pullback or bounce. Okay, I think we've been going long enough. It's been almost an hour. I don't want to have you guys falling asleep a bit on me. So you see the pattern today. The idea is when there's a day where it's kind of flat, you see the volatility index is up and down 1% or less. You see the markets are kind of mixed, a little green, a little red. The charts are usually moving like you see today, respecting resistance levels and respecting support levels, either bouncing up off the support or bouncing down off the resistance because the news just isn't big enough at the moment to break those price levels. Okay, Michael, good question. As we close, it's a good question to answer. Others might wonder the same thing. If we have in retail trading thousands, tens of thousands of traders with pending orders at a certain spot, waiting to buy or waiting to sell, when all of those trades kick in, is that a self-fulfilling prophecy? Meaning, if 50,000 traders all sell at the same time from the same price level, does that actually cause the market to drop? Because usually when you sell something, that causes the price to drop. So if everyone sells at the same price level, it's a self-fulfilling prophecy. The market drops because people expect it to drop, they sell, and because they sell, it drops, right? So a self-fulfilling prophecy. There is some of that involved in terms of the price movements, but from more institutional type buyers and sellers that are actually taking possession or giving away possession of the underlying instrument. meaning when you trade with AvaTrade or any retail broker, you're not actually taking possession or giving possession of the asset. So when you sell 1,000 barrels of oil, you don't actually have to deliver that oil to somebody, right? So it does not. You're speculating on the price with retail trading, because all you're doing is speculating on the price movement. You actually are not contributing to the price movement, but someone on the market is, from that same price level, doing the same thing as you. Imagine if you did own a bunch of oil, you actually had physical oil, you'd be looking at that same price level. So at that same price level, you'd say, well, you know what? I know a lot of other people might get rid of their oil and sell it. And if everyone starts selling their oil, the price is going to drop. So then you decide to sell your oil, and everyone sells oil at the same time, it causes the price to drop. So you're basically, with retail trading, not causing the drop, but riding the wave at a spot that you know others will cause the price to drop, if that makes sense. So retail trading, like with AvaTrade and other retail brokers, you're speculating on the price movement with contracts for difference. There's no actual pass-through ownership of the underlying instrument. So you are not causing the price change, but others are, with the same strategies that you're using. And by using the same strategies they're using, you can catch the wave that they're creating at those price levels. Okay? Very good question. It's actually a rather advanced question, which is very nice. Okay, that's a good spot to end. We'll have another session on Thursday, earlier in the day, 11 a.m. UK time on Thursday. Okay, and this session and all the sessions, they're uploaded by the next business day on our YouTube channel. And so they're all recorded, including this session, and you can find them there to look at past sessions as well, to get repetition of the strategies and concepts that we've gone over. Because you don't have to see it live to take advantage of it, because you can apply the strategies we cover to any instrument at any time once you perfect them a bit. All right, everybody, thank you for joining. Till next time, good luck with your trading.